Hello everyone, this is Calvin, Professor C here. So as a new mortgage agent, one of the most confusing concepts to understand is bridge loan. But not to worry, I'm going to tell you everything about bridge loan and then you will be the master of bridge loan very soon. Okay? So let's look at the screen and see this scenario. On January 2nd, you sold your old house. Okay, I use old house as in existing house. So you sold your house for $1 million. Let's zoom that in and let's see. You sold it for $1 million, existing mortgage $300,000. So that means existing equity in the house is $700,000. You got it? Now, it's sold on January 2nd and has a closing date of March 15. Then, what you do after you sold your house? Obviously, you go to find your new dream house. So you go out and hunt for the house. And on January 15, you find it, you put in an offer and you got it. So you bought the new house, okay? The price is $1.5 million. You go to the bank and, find a nice mortgage broker and get a proof of $1 million mortgage. So the down payment you need is $500,000. Closing is March 1st. So now March 1st come. What happened? There is a problem. You need $1.5 million to close the house. The bank will give you $1 million. But you don't have the other $500,000 because the money you need are all kind of stuck in your old house. Okay? You cannot take that house and give it to the new, to the seller and say, okay, take this part of my house, it's worth $500,000, let's do the deal, let's close it. So what happened is the bank would grant you a temporary loan, and it's called a bridge loan in Canada, which would equals to the down payment you need. How much you need? Yes, $500,000 minus any cash that you have. Say that you have $100,000 cash on hand. So down payment need minus cash you have. Down payment you need $500,000. Cash you have $100,000. So the bridge loan, how much is the bridge loan? What is the amount of the bridge loan? You're right, $400,000. So the bank would grant you $400,000 bridge loan. You have cash on hand, $100,000. So that's $500,000 plus the $1 million that the bank gives you as a mortgage. At that time, then you have $1.5 million. So on March 1st, you can close the deal and you get your dream house. So this is what a bridge loan does. But the bank would only grant you a bridge loan under 3 conditions. And you must meet all 3. And I'm going to tell you what it is. First one is the existing house must be sold, and that is firm sold, before closing of the new house. In our scenario, when did we sold the house? Do you remember? January 2nd, you are right. Second criteria, equity in the existing home, like the old home, must be larger than the bridge loan amount. Do you remember how much is the equity in the existing house? Yes, $700,000. How much is our bridge loan? Bridge loan equals to down payment need minus cash you have. We need $500,000 and the cash we have $100,000. So bridge loan is $400,000. So existing home equity in that is 700. Yes, so 700,000 larger than $400,000. Okay, so that criteria 2 is met. Last one, closing date of the new house is earlier than the closing date of the old house. So when is the closing date of the new house? March 1st. And the old house? March 15th. So do we match all 3 criteria? Yes, we do. So on March 1st, congratulations, you're the new homeowner. Well, you might ask, so what happened to the bridge loan? Well, let's look at it. On March 15, your old house is closing. You sold your old house, it is closing. You sold for $1 million. The lawyer will help you repay the existing mortgage of $300,000. There will be a proceed of $700,000. That proceed would use to repay the bridge loan, which in our scenario is actually now $400,000. Your lawyer will help you repay the bridge loan to the bank. And the leftover, which actually is $300,000, is given back to you. So let's look at the whole picture one more time. You sold your old house on January 2nd. You bought a dream house on January 15th. On March 1st, you met all 3 criteria, which is again, existing house must be firm sold before closing of the new house. Existing equity is larger than bridge loan amount, and closing day of the new house is earlier than the closing day of the old house. You met all 3 of them. So the bank grants you not only the mortgage, but the bridge loan of $400,000 with the cash on hand, $100,000, you get your new house. And on March 15, your old house is closing. You get the proceed of $700,000, which is the sold price minus the existing mortgage. The lawyer will also undertake to pay the bridge loan to the bank. We pay it, so $400,000 pay back to the bank, and you have $300,000 left. And that's what a bridge loan is. Now, thank you. Please subscribe to my channel, like this video, and hopefully leave a comment in the YouTube. Okay? Now, as a bonus, I'm going to tell you a little bit about what kind of scenario. Yes, I'm going to give you a bonus script. Okay? Yes, I'm going to give you some bonus material. If a client comes and asks you, I want to, move up, I want to sell my existing home and move to a bigger home, just like our scenario, but they don't know how to choose their